Well, good morning, Southern Oregon, and welcome to the Real Estate Show. I'm Alice Lema here with Pete Belcastro. We're both brokers at John L. Scott, Southern Oregon. And here we are. Happy New Year, Pete. We're in January.
Well, at least we're getting some rain, and we're getting some storms. We're getting some snow a little bit in the mountains. So that's a good sign for 2021, because as we need water, and that's a good sign. So let's just pray that we get more. But yeah, I'll tell you, Alice, the real estate market is so interesting as we go into 2021. What it was going to do, were we going to get more listings? Were we going to be able to sell more properties, or what was going to happen? And well, the first part of the month here, we're certainly selling them. They're going out faster than they're being replaced. That's been going on for a long time. And so we're really down with inventory, but we're certainly not down with buyers, are we? There's lots of people out there looking for all sorts of properties across all three counties right now.
Yeah, and I think it helped that recently some of the mortgage programs raised their loan limit, which means where before, like if you were in an FHA program, if you were qualified for an FHA purchase, you could only go up to maybe 300 or 310. Now you can go closer to 350. And I think that has eased some of the situations, but it's also still just kind of frustrated the buyers that are out there trying to bid on the good houses, because they do go fast. So
our market is many things. One of them, I was going to say that our market is many things, Alice. One of them is there's lots of inventory in the 500,000 and above category that's out there. There's just a good choice for people if you're priced in that category and things like that. It's a good time to buy there. But if you're looking below 500,000, they're just literally sold out of inventory. It's it's about a week's supply of inventory in some of those price ranges. So buyers are out there, they're looking, and there's just not the inventory still to do it for most of them. Therefore, that makes the market really volatile for a lot of people trying to buy.
Well, and we're going to talk about that by Giles today, Mutual Omaha Mortgage, and we're going to go over some of the creative ways that buyers and sellers can work within these market constraints.
Because they're out there, yes, and Guy's such the expert on it. And, interest rates we're even talking 2.25% for good credit. Can you believe it? It blows you away. Yeah. So that's what's going on out there. People are out there buying, they're qualified, they've got money, they got down payment money. There's just for most of us, there's no inventory to buy. It's just not there. We're hoping it's going to be better. We'll find out.
Well, so stay tuned. We'll have a quick break. We thank our sponsors, John L. Scott, Rogue Valley Associates Realtors, and Mutual of Omaha, Guy Giles. Don't touch that dial. Well, welcome back to the Real Estate Show, folks. I'm Alice Lema here with Pete Belcastro. We're both real estate brokers at John L. Scott here in Southern Oregon. And today we're happy to have our in-house lender be our guest today, Guy Giles, Mutual of Omaha Mortgage. Guy, welcome back. How are things going for you this early New Year's in January?
Man, well, as much as we need rain and I like it, I'm a little bit kind of wanting to get outside and go do something. So I guess we'll kind of see how that goes. But everything's still going crazy around here. I'm getting calls on refinances. I'm getting calls. I think on the very first day back, I got four contracts. So people are buying houses also. Don't envy you guys out there trying to find them something right now. But, a few of them here and there are finding one. Just kind of the same thing as all last year, just busier than you kind of want to be at some points, but blessed to have the business, so I'm not going to complain.
Yeah. Do you think, Guy, that home lending, Alice talked about, in our shows, what we saw last year and what we were thinking this year. She talked about waves. We had waves of buyers, and it kind of cooled, and waves again coming in. Did you experience that lending as well, or was it just like a year of everything was just steady and grew as the year went on?
Well, on my side, it felt pretty steady until just kind of right before the election, and everything kind of died off for a little bit there. But now I think that, whether you love the election results or didn't like them so much, at least people know what they got now. So I think people will get off the fence a little bit and start maybe listing houses or like I said, whether it's what you wanted or what you didn't want, once you know what you have, then you're a little bit more apt to maybe make a move that you were holding off a little bit. So we had waves. It'd be refinances. Mostly, I've always been a purchase-driven guy for the last 5 or 6 years, but definitely had my share of refinances in the last year or so. And I don't really anticipate rates going anywhere in the near future. So that's probably going to continue to happen, especially with prices going up. I'm seeing a lot of people that are getting out of mortgage insurance that had it a few years ago, and they're coming back to me to see, hey, my rate's marginally better or a lot better. And, can I look at getting rid of this mortgage insurance? And that's actually what I'm doing a lot for people right now, other than the regular purchase money.
So, Guy, what is the process for that? If somebody is thinking that they might be close to that 20% equity payoff, how does that work?
I'm sorry. The first thing that I do is I'm a big proponent on, sticking with your real estate agent. So it's a nice touch point for them to, call them up, say, hey, could you do, a little analysis for me and let me know about what my house is worth. And then at that point, I'll have them send me a statement also. So just so we don't, that we're not out paying for appraisals that, for deals that won't happen. So I try to do a little bit of due diligence up front, get one of their mortgage statements so I can see exactly what they are paying right now, and then try to get the best idea I can of what their house might be worth at that, at this moment. I am getting a lot of appraisal waivers, even on refinances. So a lot of times we know before we're even going in, we run it a couple different ways. Actually, we have a lot of little techniques to try to get an appraisal waiver. So if we can get that, and we know that we're going to get rid of your mortgage insurance, or we know that we're going to, what we're going into up front, it's just kind of a nice thing, because that is the one unknown. If you're refinancing your house, you don't know exactly where the appraisal is going to hit. Like you do on a purchase, either it hits where it's supposed to, or it doesn't. But you just the more information we can get up front when we're doing a refinance. Anyway, that's kind of the process with me. I just want to make sure that it makes sense for them. And if somebody's going to be selling their house in 2 years, I would probably advise against doing a refinance. It's just a math question at that point.
Gotcha. So the idea of removing your mortgage insurance only works. Well, actually, it'll work if you have, it's even better if you have an FHA or a USDA, isn't it? Because then.
Yeah. If you can get, a few years ago, to shore up, just their funding, they made these for the life of the loan. So even though the FHA is a really good program, sometimes if you have a smaller down payment, which the funnier part is you can actually do a conventional loan now with a smaller down payment than you can on an FHA. So, we're doing 3% down. It's not a lot. If you can come up with 5, you're going to get a lot better deals. So we try to figure out how to come up with a little bit to get to the 5% down. But there is mortgage insurance for life now. And they kind of did that in order to just recapitalize and make sure they had enough money to keep the program going. So I don't see that mortgage insurance forever going away anytime soon. And believe it or not, if you got a loan a few years ago or last year or something with an FHA, it might actually be lower now with a regular conforming loan and get you out of that mortgage insurance. But everything's case by case as far as I'm concerned. I'm not a guy that just wants to make a living refinancing people. It has to make sense for you. So, just come in, I'll ask you a few different questions and what's the most important thing to you. And if we can accommodate that, then we'll do a refi.
Yeah. Well, we got to remember the average Oregon homeowner gained equity last year, Guy, of $23,000. So we're gaining equity as we go along here. And in Jackson County, we had double-digit increases in equity in the last report that we had at the end of November. We haven't got the December stuff out of that. So we're seeing certainly equity rises here all over the place, and not every community, not every neighborhood, but we're seeing that overall, that double-digit increase. So there is some equity. People are gaining equity in their properties, and that is really a good thing. How fast it goes is up for debate, but we're certainly seeing that everywhere. With prices are pretty much they're going up because the demand is so great and the supply is so darn little.
Well, there's a big movement out there, what I call profit taking. So even people who were not thinking of moving are seriously considering selling right now just because they can, and they can get a really big profit to do their next purchase with, maybe move out of the area, downsize, whatever they want to do.
That's actually what I was thinking about also, maybe giving, Alice or Pete a call here to just find out what your house is worth. Because if you haven't really looked into that in the last couple of years, it might actually help you make a decision on whether you want to keep it or downsize or get something bigger if you're planning on having another kiddo. So it's always good to kind of keep track of that, because it's, all of a sudden you look up and you have a couple $100,000 of equity just sitting there doing nothing. And I'm not suggesting you refi and take a bunch of that money out and go buy a boat, but maybe it is, laterally, or buy an investment property at that point, or turn that one into an investment property and go buy a new primary residence that might suit you a little bit better now.
Yeah, it's really kind of an interesting time. And during the break, Pete was talking about some of the stats that were just so mind-boggling about our low inventory.
It's beyond anything. I think, Alice, you and I came into business at the same time, 13 years ago now. We've never seen anything this way so low. Even, we're in the Great Recession hit. There was tons of inventory out there. People could choose. And we've seen it drop in this last year, 60 some, 70 some percent. I mean, look, there was only 249 listings in all of Jackson County. Stick-built homes in all of Jackson County last week. The week before there were 276. Now there's 249. That's from Ashland, East Medford. I mean, that's the whole thing. And of that 249 guy, this was so interesting to me. Of that 249, over half of them are priced at $500,000 and above. And so you see immediately why people are raise higher, try to get more for their dollars, because they're seeing the inventory is just so it's so crazy right now.
That I honestly don't see those statistics all the time. That's actually does kind of blow me away. I had no idea that half the houses were over $500,000. It definitely prices some of the new guys and girls out of the market, unfortunately. But we may see some things getting a little bit creative. They say elections have consequences, and Alice always cautions me about getting super political, so I'll stay really generic on this. But historically, the Democrats are more of a mind that everybody should own a house. So, they might come out with some programs now, and they might loosen up some things that would make it a little easier for people to be able to get into houses. So I'll keep an eye on all that really close for you guys and keep you updated on what's going to happen there. But we haven't really heard a lot yet.
See, I don't think, Guy, that it's the fact that they can't get a loan. I've got lots of clients. I think Alice would say so too. We've got clients out there who are already pre-approved. I mean, they're out there searching. The problem is at the other end is in that supply category again, is that where do we go to look? And, even in the market snapshot that John L. Scott prepares for us every month, that's done in Jackson County as a whole. If you're looking between I got it right here. If you're looking between $250,000 and $350,000 price range, which again was the most popular price range around, it's slipping there. You've got a quarter of a month supply. I mean, a quarter of 1 month supply. And if you're looking at 350 to 500,000, you're looking at a 0.31 month supply, a third of a month in those price ranges that most of us can afford. They're not. And those that are out there, Alice, do you think that a lot of the properties that are out there, if they're nice and they're ready to go move and livable, they're going to be gone, as you say, like that? So there's a lot of these properties that are still out there that need a lot of work, right? Or what do you think when you see them?
I think this week, the latest batch of properties I looked at, there were more move-in ready. They're not all updated, but they're not what I would call falling apart. So yeah, so I think we've got a nice mix. It's that, 250 to 350 selection that's super tight. And the buyers really have to be realistic. If they want to get a house with these low interest rates, then they need to make some choices. And their choices are going to be location, the kind of house they get, or the price. And so we're talking to a lot of them about how important their criteria is and what can they soften on, or can they reach out to trusted members of family, extended family that might be able to help them with a little extra cash, co-signing, being on the contract with them, something like that, just so that they can get their foot in the door and make that better offer.
Yeah, we're definitely seeing a lot of family step in, look at, what they call a non-owner occupying co-borrower situation, where the parents will kind of come in and, they may not be overextended on their house at all, and they have a little bit of room in their credit, and the kids just kind of starting out. I'm actually doing one of those right now in West Medford, where the kids are buying the house right across the street from the parents, and they're just kind of helping them sign for it. And they'll have babysitters across the street, and the parents will have their kids close, and the whole thing's kind of working out, for everybody.
Yeah.
So there are a few different options to kind of get creative and get your family involved if you can.
Well, and we have a break coming up. Alice and Pete with John L. Scott here, talking to Guy Giles, our in-house lender. Guy Giles is with Mutual of Omaha Mortgage. So do not touch that dial. We'll be right back. Well, welcome back to the Real Estate Show, folks. Pete Belcastro is here, and I am too. I'm Alice Lema. We're both brokers at John L. Scott here in Southern Oregon. And we're having a very interesting conversation with Guy Giles of Mutual Omaha Mortgage. And also, Pete and I were talking during the break about some of the stats and some of the potential side effects of having so much upheaval in our Southern Oregon real estate market. So, Pete,
well, there's go ahead. Yeah, well, I don't know as we go along here, there's so much activity going on, but we're seeing really if you're a buyer and you're in above the $500,000 price range, and Guy gets you approved in that particular category in all three counties, Klamath, Jackson, and Josephine, you've got a tremendous supply of inventory to look at. That's where our market has moved. That's where the available inventory is right there, and that's where those people are going. If you're under that range, you really have to scramble, because it's literally if you ever hear of something being sold out, we're literally sold out of inventory in these counties and these price ranges. There just isn't any. We have a quarter of a month's supply of inventory in Jackson County, and up to $350,000. That's sold out.
So
what do we do?
A quarter of a month is 1 week. Is that what you're saying?
Exactly what it is. 1 week's supply, and they're going out. Last week, there were 55 sales in Jackson County last week. 25 of those were $350,000 and above. Okay, the problem is that inventory is still shrinking. We're down 36 from the week before. So I don't know where we go from here, and it's going to affect lending. What happens, Guy Giles, if we're sold out and we have, everybody's pre-approved, but nobody, there's nothing to buy?
You know what? It just slows down a lot. It's either that or again, you just kind of get creative and maybe go in with family members and buy something that's a little bit more expensive if together. There's a lot of people out there that are just priced out of that $500,000 mark right now. And even if they're not, it feels to me like they're being a whole lot more responsible than they were, 10 years ago, when everybody just wanted to get the biggest house that they could, and who really cares about the payment. So I think everybody is being a whole lot more responsible. So I really don't know what you do when there's no inventory. I don't know if you guys have done any research into when some of these houses in Phoenix and Talent will be ready to go again. But I'm still sorting through people that lost their house in the fire that are now closing on, that are now closing on their deal and finally getting off their mom's or their buddy's sofa at this point. So it is a struggle. There's no doubt about that.
Well, take it the next step, Guy. And say you did have a place you wanted to build back up in Phoenix or Talents, for example. There's no contractors out there right now because they've been building at full speed in different places. Prices are going up because the prices of materials have gone up because of the demand. There's gone up because of these fires and this type of thing. So you're really between and try to find skilled labor and plumbers, electricians, etc. to do this right now. It is backed up for weeks and weeks and actually months in many cases. And so it's going to slow the whole thing down further. So this is the first time, and probably you've done this a long time, the first time you could probably ever say you could run out of literally inventory to sell and land where we have tons and tons of buyers. And there are no shortage of buyers, Alice, is there? There's no shortage of buyers right now. And they're pre-approved. You already approved them, Guy, but no inventory for them to buy at this point.
Well, and I think we really do have a lot more listings coming. And I keep predicting it, and then it's taking longer than I realized. But people are out there, they're making their arrangements. The enormous amount of appreciation people have experienced since the shutdowns, which caught us all by surprise. There really is a movement of profit taking. And then there's people that were ready to downsize and maybe go on that travel the world idea. You know, they can't maybe do that now, but they're going to go travel the United States. There's a lot of people. I think the pandemic made people stop and think, what do I really want to do? And what does my house really look like? Or how should it look? And who do I want to be with them, you know, if this happens again? So in Southern Oregon, because we were on one of those lists of places to go for other people in the United States to come to, it really did drive our prices up. But at the same time, a lot of our locals stopped to think about what they really need out of their housing as well, and who do they want to live with.
Okay, well, you're right. Well, you're right all about that. I guess the question becomes is how do we get out of it? What is going to change?
I think a lot of those people are going to start selling their houses.
You
I keep saying that.
You started saying that how many months ago? And
halfway through the shutdown, because I think it's a natural evolution after a shortage, that then you have a balancing of the market, an inventory balancing, and then maybe even a little bit of extra. So
part of this might also be just naturally some landlords do sell their houses every now and then, you know, to get their cash basis back in line with where it should be after all the depreciation. And if you're not allowed to evict anybody, or people aren't really moving around because of COVID, you know, that could have actually really hurt our inventories also. And now that they have some vaccines running around, people hopefully will be loosening up pretty soon. I have a friend that's pretty connected, and, you know, he's thinking early summer, you know, we should be in pretty good shape again as far as everybody feeling a lot better about this. So that would be one thing that I could see opening up some sales anywhere, or at least some houses, some inventory.
are you saying the vaccine would make some potential sellers put their house on the market? Is that what you're?
Well, that and if you can't get a renter out of there right now, whether they're paying rent or not, even if you wanted to sell your house, I don't even think you can start that clock until you actually have the contract, can you? As far as the eviction process. So I think it's just stopped a lot of people in their tracks that might have otherwise sold, you know, some of these lower end houses, not lower end, but, you know, in the price ranges where we're really hurting right now, where a lot of the rentals are, that people are just stuck and they're really not able to get out of those. But once people can start moving around again, once you can start either evicting people or they feel like they can move from their rental, you might see some of those houses kind of hit the market for sale.
Yeah, and I find that a lot of those tenants qualify to purchase now because the interest rates are so low. And a lot of them have not been spending money this last year because of the lockdown. And that just adds to our buyer pool. But we do have some situations where through negotiations with their existing landlord, we can facilitate a purchase of the tenant buying that existing property. So that's been kind of fun. But we do need anybody who's ever thought of selling to definitely give somebody a call. Give us a call, be great, but give somebody a call.
I know both of you guys are really good at it, so you should call Peter Alice here. They'll take good care of you.
Well, to show you how crazy it was, there was over 1,000 listings just in Jackson County a little over a year ago. And you can see how far we've dropped. But it's just the price disparities that it would have now is so different in what's out there for sale, and that's where we're really at. So, Guy, if someone's out there listening or watching this and says, "Well, I may qualify for 350 versus 500,000," what's the difference in payments? And I know you don't give me specific numbers, but what would just kind of be a difference for someone thinking about? Well, I could go more.
You're probably looking at about $42 for every $10,000. So on $150,000, that'd be about $420. That's everybody's favorite number around here, huh? Let me just do some quick.
Okay, $42.
6.25, 2.65.
Yeah, that's great. Thing $42 for 10,000. That's great.
Yeah, it actually I've watched that number move down a lot over the last little while. And another thing is the mortgage insurance. If you have a good credit score, used to that was a very, very generic number on the mortgage insurance. I mean, yeah, FICO drove it a little bit, and loan to value still drives it. But if you have a good credit score, or there's more than one borrower on there, the mortgage insurance companies like that a lot. And you end up getting a really good rate on your house because there's that second level of scrutinization coming through your mortgage insurance company. And just in case somebody doesn't know, anytime you have less than 20% down, unless you're doing like a VA loan or something, you have what's called mortgage insurance on your house. And it's just a little bit of extra skin in the game from the buyer that, lets the lender know if you default that they're going to get, they're going to be able to recuperate more of their money back. So this mortgage insurance, it can be a factor. If you have a 630 credit score, it's going to be a whole lot higher than if you have a 750 FICO score. And if you have a co-borrower, we're really finding this. A lot of these places are getting creative. So even if your credit score isn't perfect, but whoever you're buying the house with, they might have a little bit of a better one. It's getting a lot more competitive. So consequently, a lot cheaper for everybody. Anyway,
this is a great thing for families to do, is to join forces with, if you have any adult kids or adult nieces and nephews that you trust and are doing a good job with their life, and saving the money and getting their credit score up. It's a good opportunity, I think, for some of the elders in a extended family situation to not only help out, but to possibly partner with them. And then there's appreciation that can be shared on both sides. So it can be good for everybody.
Well, and maybe it's even looking down the road a little bit. If you kind of qualify for a $275,000 house and your folks are getting a little bit older and they're in a $375,000 house, 2-3 years down the road, you guys might want to be together. So maybe it is the $600,000 house, and then once you combine all that, both of you are actually a little bit better off financially, and you're able to help each other out and be together.
Yeah, we do see a lot of that. We see a lot of that. Bundling is the marketing term. We're humans of different.
Thought I just invented that.
No. But good try.
Hey, Alice, I just figured out what that did. If you were at 350,000, you wanted to go to 500,000. Guy was saying $42 roughly per 10,000. I figured that out. You know what that comes to? It comes to about $630 a month more if you went roughly from 350 to 500,000. So somewhere in between maybe is what maybe people could look at also. Doesn't have to go that high, but then we get closer to where there's more inventory there to look at. Anyway, that's another way to figure it out, because until there's a glut of inventory coming back on the market, this is the market condition that we're going to face as we go forward, looks like, through the rest of winter into spring, unless something changes drastically. And I don't know what that's going to be.
Do you want to know something funny? I redid the math. You know how I said it's been going down, and just doing the math with today's rates, It's more like $40.17 a month for every $10,000.
Wow.
That, and even 600 a month spread out over 2 or 3 people, that's not that much. And I just think we have to help people look at those options. So we've got a break coming up, folks. Pete and Alice will be right back with Guy Giles, Mutual Omaha Mortgage, talking about low interest rates, low inventory, and opportunities in Southern Oregon real estate. Don't touch that dial. Well, hi there, Southern Oregon. This is Alice with Pete. We are brokers at John L. Scott here in Southern Oregon, talking to Guy Giles, Mutual Omaha Mortgage. And it's just been a very interesting winter. We just got our stats from 2020. A lot of surprises in Southern Oregon real estate. So Pete, we've had low inventory, and then now we're in extreme low inventory. Do you know of any other ways we can get out there and encourage folks to put their property on the market? Like, what's the latest creative idea?
Oh, you want the honest idea? Let's open up let's let schools open up and let people social distance and do the things that we were asked to do. Let restaurants open up, let people feel that they're free again to make their own decisions. That would certainly help, because right now, and I've been saying this, and I know you and I went back and forth over this whole thing about why aren't we getting more listings? What's happening out there? People are not moving because of the uncertainty that's out there within their jobs, whatever. To me, as you always say, oh, Alice, certainly some people have to move, and we understand that whole thing. But for a lot of us, there's no other reason why we're seeing such a low inventory. You'd normally have over 1,000 homes on the market, 1,200 of them, 1,500 of them in Jackson County at times. That's a normal market. We're down to 250. So you can see the issue. So until things open up, Guy, I know, is going to agree with me on that. Until things open up and people feel free again to move and to go about, I think we're going to be in this situation. It's going to change a little bit, but not like we need it to get back to any kind of a normal market for a while.
Well,
No, I mean,
sorry.
No, I was going to say, even people traveling here from California, I mean, that was a ton of the market, and we're still getting them. Speaking of that, try channel 10 in the morning at 6 a.m. That's one of our new residents coming up from Southern California. The new, anyway, Meyerly, she's a really good little newscaster that just moved here. But so we're getting 1 or 2, but we're not getting the hundreds that it felt like we had all the time, because people just aren't allowed to move around, and they're just not feeling comfortable coming up, doing their thing. Because a lot of the people that move up here are a little bit older, and they're trying to be careful and not catch anything right now. And everything being shut down is a huge hindrance to, especially, well, I'd say our market in the higher volume. But then again, we're dealing with nobody's selling. So everything just feels a little strange.
That's the problem. Nobody's selling. You're exactly right there. Because Alice and I, we see people sneaking over the border all the time. If they're coming up, they're coming. They're everywhere. People from California, as we see them looking to go. I talked 3 or 4 people just this week who've come up, and we've shown property. They just want to change. The problem again is, where do you buy and where do you go? Because the inventory is so low. So they're coming. I mean, they're here. Alice, you see that every day as well.
Yeah, and a lot of the demand from those relocators is for rural property or small rural property. So that's been kind of an interesting dilemma. The prices in town are going up. And as Guy Giles was mentioning earlier, when we do not have an appraisal, he was talking about more of the appraisals are being waived, which means partway through your transaction, you find out there's not even going to be an appraisal. So if you negotiated a higher price, then that is the new comp for that neighborhood. And lo and behold, 30 days later, you've got like a $25,000, $30,000 bump in town. And if it's out of town, some of those bumps up are $50,000 and $100,000. So that's how we got our $400,000 average here in Jackson County, just basically in less than a year. And it's causing a little bit of havoc, but we still have plenty of people sneaking over the border, like Pete said.
Yeah. Last week, $437,000 was the median price on 55 sales. So that has not dropped, Alice, since we first saw that happen back in June, I think it was. when it tipped over into that 400, that median price. Wasn't
Started
it?
in March, and then the
Yeah.
escrows closed, and then about June is when it started looking like we were on our way to a price increase over time.
So just think of this. Just think of this. The National Association of Realtors says that 2021 will be the business. Expect to sell more homes in 2021 than any year since 2005. So that's 15, 16 years ago. If the height was before the Great Crash, remember, and we're selling more homes since then in the middle of a pandemic, whatever you want to call this whole thing going on around us. So you can see the activity. Again, we've talked about real estate. The industry has been the driving force in the economy with the pandemic because it has affected so many people, and they've allowed us to work, first of all, and do this. It has changed it all. If it wasn't for real estate, my goodness, the economy would really be humbled. So real estate's a driving force. That's why interest rates are down, because they're keeping this economy going. That's my opinion on it. I don't know what you guys think, but real estate is saving this right now, and it's not. It's going to continue. It looks like for into 2021, further than maybe we even thought.
Yeah, California might not be the place if you're hoping for a bunch of appreciation right now, but as these people are able to start moving around, they're finding out that, I've mentioned this before, that obviously you can work remotely, and that's just something that you were never allowed to do before. And people are, my daughter just got her CPA license and works for a great CPA here in town, and she's getting calls about working remotely. And it's one of those things that people are not going to get stuck in a quarantine situation in San Francisco with people turning in the streets if they can come to a place like Southern Oregon and move. So they're going to be coming. If you're thinking about selling your house, call one of these two and find out kind of what it's worth, and just be ready to do it, because when it hits, they're going to come fast.
Yeah, and part of the dilemma for some of those folks that would like to move is, where do they go? Like Pete said, it's like, where do you go? And so over the summer, we have honed some of our creativity skills for the sellers, negotiating contingencies in the contract with the buyer for the seller to find a suitable replacement dwelling. And we've had quite a bit of success with that. The buyers have to be extraordinarily flexible with their timelines for that situation to work. But if you're a buyer and you can figure out a way to offer that to a seller, you can end up winning a multi-offer bid without throwing more money in, just because you can be the flexible one and give that seller, as much time as they need to find another house. So that is some of the creativity that we've been experimenting with over the summer.
Yeah, and for sellers, I think big thing, Alice, is to get your house ready to sell it. When you put it on the market, it's going to sell if it's in any kind of decent shape. But do the buyers a favor, get it cleaned up, get it all prettied up as best you can, get it as move-in ready as possible, so that way you can get the price that you want for it, and then some maybe. But get the house ready. Don't leave it messy. Get it prettied up. So that way, when we come in and show it, people are going to go, wow, this is a great one. And you're going to get maybe multiple offers and get more money. That's just the situation of the market. That's the way we're in right now. And it's really interesting to watch it week after week, isn't it? As we've gone through this, and we'll see what the rest of the month brings.
Yeah, well, and it was sudden, it was unexpected. And then we had the fires, which just added to it. So now here we are coming out of all that, hoping that the market will normalize. I know my predictions are long. I still say, because of all the people I talk to, there's agents out there, there's people out there that want to get their house on the market. But like Guy Giles said, they just don't feel safe yet.
No, that's true. I think we're all right. Yeah, well, I think you're right. Anyway, Guy, good luck to you. We'll see what happens this month when we talk to you in about another 30 days.
Well, that sounds good. And our conforming loan limits did go up a little bit, so you might call me or your lender and just kind of ask, where some of those changes are. And we're out of time, so I'll shut up.
We've got more coming next week. So this is Alice and Pete saying, have a beautiful Southern Oregon weekend, and we will talk to you next week. Bye now.